What's going on, everybody? It's Rod with Pow Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Today is Wednesday, June 18th, and it's Aurora taking it on the chin day after Q4 2025 earnings disappoint, and they had some accounting errors. There's also a bear flag that confirmed on the chart, showing that we could go even lower than where we are now, and the target for that is $4.10 USD. We'll take a look at the ACB chart towards the end. I'll bring up the price chart, give my thoughts and opinions on the technicals and the price action in the days, weeks, months ahead. Before we do, make sure to smash the like, help support me in the channel. If you're new, you can subscribe, tick the bell, all that good stuff. You'll be notified on any future videos or when I go live. And as always, this is not financial advice. This is for entertainment purposes only. And full disclosure, I do own Aurora in my portfolio. It's a very small position, just a couple percent, but want to be completely transparent. You can also follow us over on X, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. And I think my partner's getting my daughter ready for a nap, and she's not having it. So hopefully it's not too distracting. It's definitely a little distracting for me, but hopefully not for you listening in. So if you tuned into my Aurora Q4 2025 earnings prep video, essentially in these videos, I go over my thoughts and opinions on what to expect in terms of analysts' estimates and consensus. I add them all up, and then we get an average. So we were expecting 87.95, so just under 88 million Canadian in terms of revenue, and earnings per share EPS was forecasted at positive 0.057, and they had a huge miss in terms of EPS. It came in with a loss. So in my opinion, that coupled with the accounting errors that they saw, which we'll dive into more in just a moment, really is what made it take it on the chin today. While they did beat analyst estimates with regards to revenue, it came in at 90 million. Like I said, they had a huge miss in terms of EPS. And you can see here, there's something that investing and trading view are smoking. It's probably not MJ because, I don't know what they're on, but it's something a lot harder than that because they're saying it came in at positive 0.06. Revenue was correct though. It says here 90.54 million. This is on the US ticker. So actually that is the Canadian number. And the forecast says 63. Well, that's US. So again, I don't know what they're doing here. Someone needs to get their crap together over there. And then on TradingView, you can see estimate 88.82 million. That makes more sense. And you see here 90.54 million reported. So they came in with negative 0.35. That actually, I take it back. They actually had it correct, but that's not that negative 0.35. I added it up. It's actually negative 0.305. So maybe they forgot a zero because I added up. I went to the shares outstanding. I took the loss, which is 17,183,000, which we'll look at in just a moment, divided by the amount of shares, which was 56 million shares and change outstanding, and it came in at 0.305, negative 0.305. So maybe they just missed a zero there. But yeah, they weren't too far off compared to investing.com. Like I said, I don't know what they were smoking. But we'll bring up the financial statements. It's probably best actually if I go through, this is the full annual report, and I believe it was unaudited. But we'll go through the MD&A, the management discussion and analysis. This one's much easier to read, and it's all in Canadian dollars, unless otherwise stated. So we'll scroll down here. We'll just go over my thoughts and opinions on it. So if we go down to net revenue, you can see here for the 3 months, March 31st, 2025, came in at 90.538 million. And for the whole year ended March 31st, 2025, 343,293,000. And you can see here net income loss, 17,183,000 for the quarter, and actually came in positive for the year end, but that was a huge miss in terms of analyst estimates for EPS. And then we'll scroll down here. We'll take a look at some of the gross margins. So they didn't have too bad. Adjusted gross margin before fair value adjustments on MJ net revenue. You're looking at 27%. Scroll down here. I do want to show you their excise tax as well. They break it down via medical sales. So they're expecting some weaker international sales. Again, we'll go through some of the highlights in just a moment. But as you can see here, excise tax for the quarter was only 6.754 million. So again, this goes to show you, and there it is there, the gross margin was 30%. And for the year end, it was 55%. So as you can see, focusing on international has been fruitful because it's less excise tax and it's also higher margin. So most most licensed producers in Canada. Like Aurora's not even in the top 20 anymore in Canada, licensed producers in terms of recreational sales. Yeah, they, like most companies, are paying about a third of their revenue, their top line, going to excise tax, which we'll dive into it more here in just a moment. So this is Q4 2025. Let's go take a look at excise tax real quick. Excise taxes. So that's for the quarter. I just want to see the total for the year. Year ended. There we go. So the total for the year was 30.9 million. And that's total MJ. So if you take the total of 319 and then just times that by 0.33, on average, most LPs are paying around a third, so 0.33, that would equate to about 105 million. They only paid 30.9 million. So that goes to show you how their numbers have been improved, because they're not focusing on the recreational market in Canada, which incurs high excise tax. And then if we take a look at cash and cash equivalents at the quarter end and the year end, it was 137.921 million. And we'll scroll down here. I'll show you. So if you go down to the common shares outstanding, let's go here, scroll down. So issued and outstanding common shares, you can see here 56,246,404. So what you do is you take the loss, which is 17.183 million, you divide it by the outstanding shares, and then that gives you negative 0.305. So that's why we had such a huge miss in terms of EPS. The stock was down. But just to go over some of the the negatives, the positives, some of the highlights. So their net revenue was up to 244.4 million, up 39% year over year. Q4 2025 delivered total net revenue, as I said, of 90.5 million. That was a 34% increase year over year, and driven by 48% growth in medical MJ and 32% growth in plant propagation. So they achieved record adjusted EBITDA of 49.7 million, 261% year over year growth, and generated positive annual free cash flow of 9.9 million. Medical MJ represented 75% of Q4 revenue at 67.8 million, with international revenue doubling of 61% of global medical MJ sales. So they had a strong balance sheet, like I said, and they are a debt-free MJ business. But yeah, their gross margin was 62%, with medical MJ margins at 70%. Consumer MJ revenue declined 20% to 8.2 million as the company prioritized higher margin medical sales. So that was some of the positives. Negatives, so consumer MJ revenue declined 20% year over year to 8.2 million. They had a net loss of 17.2 million, though improved to 20.3 million loss in prior year, from a 20.3 million loss in the prior year. And they identified accounting errors in inventory and cost of sales calculations. So that was something that really hurt the stock. Stock was down. It's currently down over 20%. And if we just take a look at the US side of things here, and we're hitting micro oversold on the POW algo alerts as well. And we just had a golden cross, but typically that is a lagging indicator when it's tracking the price, and generally you start to go the other way after a golden cross, and we confirmed a daily downtrend with a lower high, lower low today. But from the high of yesterday's high price, high of the day, to the low of the day today, the stock was down 25%. And this is why I tell people to be very, very cautious on swinging through earnings. I've seen a lot of people in the comments on socials and in my video, my earnings prep video, that they're going to absolutely crush earnings. And yeah, this is why I say be very, very cautious when it comes to earnings. They've already done 2 reverse splits as well. You can see they did a 1 for 12, and then they did a 1 for 10. And then if we look at the daily time frame here and zoom in, I'm just going to get rid of this golden cross. Zoom in here. On the 15-minute time frame, we do have a 15-minute bear flag that confirms. So you just go from your high to the low there, and you can see here anything under 520 was a potential lower high. We hit 494, so we didn't even get above the 0.236. And then key support was 472. If we lost that, then it was bear flag confirmed, and then you just take your measured move there from the high to the low, Move it out to your 0.32 fib, and it's saying the target is 410. The low is sitting at 464. It's actually a double bottom. So that's going to be the next support here in the short term, and then lose that. Then, like I said, we're probably heading down to around 410, which would put us into daily oversold territory and most likely ultra oversold on the POW algo alert. But yeah, that accounting errors in inventory and cost of sales calculations definitely didn't help, especially with the huge loss and miss on EPS. They do expect temporary declines in international markets for Q1 2026, so the next upcoming quarter. So that is something that hurt the stock as well, and they project a decline in adjusted EBITDA for the quarter Q1 2026 due to lower high margin international market contributions. So overall, not a good look and not a great day or earnings report for ACB. DB and Oxy also trailing with the biggest losers on the day today. Verano, Love, and CL leading the bull list today, but again, Aurora absolutely taking it on the chin. We could still see an EMA 12 and 26 bear cross on the daily time frame, adding more confluence to the fact that we could see that 410 target over the next couple of days. We're also seeing major red flags here on the weekly time frame. We're close to seeing a bearish triple thunder crossover on the POW algo, which is when the price closes below the 10-week moving average, which you can see it's doing now. And then we have a stochastic bear cross on the weekly and a MACD weekly bear cross simultaneously. So once this all happens simultaneously, which could happen this week, might even happen next week, it's going to send off that bearish triple thunder crossover, and that's going to be not good whatsoever. You can see here the last time it happened, when we closed below the 10-week moving average and the MACD and the stochastic cross bearish, price went from a closing price of 541 all the way down to 342. So that's not looking good at all. We're also losing all of our weekly moving averages, so we have no support there. Could easily go into free fall, and we're below all of our daily moving averages, so no support there. So very possible that it just tail spins here and gets a little out of control. I wouldn't be surprised at all if we did drop back down to around that 410 level. But better days ahead for sure. I wouldn't be expecting too much into the next quarter in 2026 for Q1, as I mentioned, because of those reasons earlier. So again, this is why you want to be very, very cautious going into earnings. I never, ever, ever, ever swing anything through earnings. Like as a trade, that's just the most degen thing to do in my opinion, right? Like why would you even do it? You have no idea. You have no control, right? You have to swing overnight. Came out early in the morning. Your stop losses don't get triggered. It's just such a bad recipe. It's just a recipe for failure in my opinion. It truly is the casino side of the stock market. And, you know, there's so many other trades to take. I can't imagine, you know, going through a swing trade or some sort of short-term trade going into an earnings report. It just, you're at the mercy. Like it wasn't even, you know, we had better revenue estimates, but again, that huge loss and accounting errors, like that's something you never ever could have foreseen coming, right? So just hopefully that's a lesson for those that were ultra bullish on this earnings report, and a little bit of a wake-up call. The next time, I'd be very, very cautious playing on earnings as a swing opportunity. Let me know your thoughts and opinions on this in the comment section below. We'll continue the conversation there, though. It's Rod with POW Group. Thanks again for joining us on the Pursuit of Wealth, and we'll see you again on the next video.